Good evening, team. So I'm going to talk you through this evening my three kind of go-to setups. These are what I'm looking for whenever I go into the marketplace. These form the basis of the entries on every trade that I take, and these are firmly part of my rules. Now, if I don't see one of these setups, I'm not trading. Even if everything looks absolutely perfect, if I don't see one of these setups, I'm not trading the marketplace. It's as simple as that. Now, they're all based upon a very similar pattern, really, which I'll talk you through. Okay. The market will go through phases of both impulsive moves and corrective moves. Okay. We've all seen this. And in very simple terms, if you're in an uptrend, you want an impulsive move to a corrective move to an impulsive move. Okay, and that is generally how a continuation happens. We'll just say you have to excuse my voice, as some of you, if you've read in the chat, will know I'm losing my voice at the moment. So hopefully you can hear this okay. So you go through phases of impulse and correction. Okay, and equally in a downtrend, you'd have a move down with a corrective move back up, before ultimately the product price moving back down again. Okay, so these are our kind of our market trends: uptrend and downtrend. Now, within these areas, you have a lot more complicated price going on, and what normally happens is there's some sort of period of consolidation where orders mount up on both sides of the marketplace, and then where one way or the other, price will sweep the highs, sweep the lows, retest, and drop back down. Okay, and that is a pretty classic strong money Forex short setup. That is basically what we're looking for. Now, although I have different ways to find them, and although I'm going to be looking for them in different areas, they're all basically doing the same thing, which is a period of consolidation, a manipulative move which takes out highs or lows, a break of structure in the direction we want to be going in, and then a return to the entry or return to the origin or order, RTO, as I call it, RTO. Okay, I'll draw it out for you the other way around as well. Let's just move this over here. Okay, I'll draw it out for you. Okay, so this is the other way around. Consolidation move or ranging momentum. Okay, sweep of the lows, break of structure, return to order, continuation. Okay, same thing, exact same thing. We frame that we frame the raid basically. So these are the raid on the highs here. Okay, so that's our raid on the highs. This is our raid on the lows here. And the simple way to kind of understand what's going on here is we're looking for whatever happens last. Okay, so what I mean by that is, let me just edit this 2 seconds, guys. Right, that's a raid. Make that orange. I'm not got my templates up to date, but looks of it. Okay, and then we want our line to be orange as well. Okay, really, really good advice to set up templates. If you don't have templates for your lines and your tools, make sure you do it, guys. It's really, really helpful. Saves a lot of time when you're marking out charts. Okay, now if you want to know which direction the market's going in, now you should probably already have a bias. You should probably already know that this is a buy market. And you should probably already know down here that this is a sell market. These setups that you're looking for have to be in line with the other confluences. So you wouldn't just take this randomly. It might work, to be fair. It would probably work a lot more than a lot of other retail methods, but you want to be adding in other confluences with this as well. So here you would be normally selling from maybe a higher time frame supply zone. Here you'd be buying from a higher time frame demand zone. But the mentality of what's happening is the same. And if you want a good confirmation of where the market is going next, look at where the big impulsive move went. Did it go to the buy side or did it go to the sell side? Well, in this case, it went to the buy side. That breaker structure, therefore, is the buy side. Some people call it a change of character, whatever. I've always called it a breaker structure, so I'll keep calling it a breaker structure. Okay. This guy here, the bigger move, the impulsive move down, was a breaker structure to the sell side. So if this is in a higher time frame supply, we know that the market is on our side. If this is in a higher time frame demand, we know that the market is on our side. And what will normally always happen in these moves is you'll be left with some level of imbalance. And this is really, really important, okay? Don't trade these without the imbalance. There has to be an imbalance left behind. Doesn't matter how big or small it is. It could be that entire move. Doesn't really matter. As long as there is imbalance left behind, we have a reason for price to return. We need all these confluences in our favor. So the raid itself shows that there's loads of money in the marketplace. If you've watched my recent videos, I talk about supply and demand and what's happening in these areas. Well, this raid on the highs shows us that it's a manipulation move and shows us that there's big players in the marketplace. So when they raid on the highs and push the price down, they should leave an imbalance behind. And this then acts as a magnet. Price has to come back here, because when price comes all the way down here, the big players, they're in negative positions. So they need price to come all the way back up so that they can close out their negative positions before they move it all the way back down and make their money. Same thing happens here. This raid here shows us there's big players in the marketplace. They've swept these lows before moving the price back up. But now they're up here, they are in negative positions. Their sell positions are in negative equity. So they need to bring the price all the way back down. This is what this imbalance shows us. It gives us a clear indication that price is likely to come back down, as well as this raid, which shows us these two things, the raid on the lows and the imbalance, act as a magnet. So this is now a real clear indicator that we're going to do this. Okay, so this is the theory of how my setups work. And pretty much every setup is based upon the same theory. I'm going to talk you through three of my preferred, my three setups right now. Okay, now on this chart, you can see here that price has made a really good move down. Lots of imbalance. Now this is separate from what I've just spoken about. This is a zone that I've picked to sell from. And the reason why I've picked to sell from is for the same principles. There's been a raid on the highs on the higher time frame. There's been pushed down, leaving imbalance. And there's been a return to order. Okay, so we like this. This is attractive for our entry zones as well as our entry criteria. It's all the same. Okay, everything that we trade is based upon the same theory of manipulation before the ultimate big move down and then a return. Okay, so this is our higher time frame zone. Let's say price was here. We know that this is a higher time frame zone for that reason, and we're now expecting price to return. Okay, and as you can see, price does return. Now, when we get into here, what I'm doing is I'm going to move this out of the way just for simplicity. What I'm doing is I'm framing this entire zone, and I'm now looking for short opportunities. Okay, I normally go onto the 5-minute chart. I don't see any point in using the 1-minute chart. For the way that I trade and the way that hopefully you guys will trade, you're looking for day trade moves typically. Most people want to be in and out of a trade nice and quickly. You don't need the 1-minute chart for that. You may get some good trades on the 1-minute chart, but you also get a shitload of losses. So don't feel like you need to go on the 1-minute. I don't trade the 1-minute. I think it's very advanced. And I feel like most people that you know who trade the 1-minute, unless they got 5 to 10 years experience, they are losing. And if you speak to most traders who have tried the 1-minute, they are losing. And if they've got less than 5 years experience and they're not losing the 1-minute chart, they're either very, very talented or they're liars. So just be careful of that, guys. You don't need it. Okay. Now, this is my trade entry number 1. Okay. I call this the 3 push break. We're looking for this. 1 push, 2 push, 3 pushes into zone. Okay, now once I've got 3 pushes into zone, I can have a 4th or a 5th. It doesn't really matter. As long as they continue raiding, that's absolutely fine. But once I've got the 3 pushes, I'm then waiting for this move. And this move is our indication that the sellers are now taking control. And then what we're doing is we're waiting for a return. And then we had a bit of choppy price action here, but then ultimately the big sell-off. Okay. So what I need to see is this. I need to see 1, 2, 3 pushes. You can have 4 or 5 pushes. You probably wouldn't have more than 5 to be fair, but 4 or 5 pushes is fine, but 3 pushes is the minimum that we need to see. We then need to see an impulsive move down with an imbalance left behind, which we've had here. And look how perfectly price comes back up to that imbalance. There, tags there. Once the imbalance is filled, it's done, so it doesn't need to return to it again. But look how perfectly price comes back up to that imbalance. You had another one down here, look as well. And on the higher time frame, you probably had much bigger imbalances. Yeah, see there. So you got much bigger imbalances there. Okay, but let's just keep with our 5-minute time frame. Once you've had that push down, okay, all of these, just so you know, they are raids. These are all raids on the highs. Once we start to see raids on the highs in our chosen POI, this is when we start looking for entries after we've had a third. Some people might do 2, some people might do 1. I don't really care. The way I do works, okay? And you can follow the people, but I know this works. So I'm waiting for 3 raids on the highs. 1, 2, 3. Okay, we've had our 3 raids. That's great. Sorry, I'm waiting for 3 pushes, which would then be technically 2 raids on the highs, because that first one is just a push up. It does, I mean, technically it does raid some highs here, but the raids are, you see where I'm going, okay? There's 4 raids, there's 5 pushes. But look, it's not worth getting lost in the technicalities, really. What's happened here is we are seeing a clear arcing motion. This shape here, this semicircular shape here is really important, okay? That's our arcing motion for our shorts. So 1, 2, 3, 4, 5, okay? We've had 5 pushes into zone. We've then had an impulsive move down, leaving behind imbalances. So what we do then is we frame that last up move, okay? And you can take the trade as soon as you reach back into there, okay? There's no, I mean, I would have probably taken this one here, like that, okay? But so you can see what we're doing nice and clearly, I'm going to move it across to here, okay? You can see that price has exchanged hands from buyers into sellers with this clear, choppy price action. That's what we want to see in our POIs. We've then had this impulsive move down, showing us the sellers have started to seriously outweigh the buyers. And now that move has caused a major break of structure on this time frame. We've broken that most recent swing low. So that swing low there is our major structure on the 5-minute time frame. We've broken that very clearly and very impulsively. That is enough now for us to enter this trade. And it's really simple. When price gets back up to the 50%, what I would do is when price comes down here and I see that there, I'm setting a limit order. I'm setting a limit order, something like this, bang on the 50%, down there, 75, whatever you want to do. I do just under 50%, so I always get in with stop just above the high, okay? And then you get into some really lovely trades. Trades like this can go on and on and on because they are the right way to trade reversals. And this, it's not even that tight of an entry on the 15-minute chart. You could have taken this on the 15-minute. You can see all the elements are still there. Imbalance, 3 pushes, impulsive move down, return to 50%. It's really simple. You can take these on any time frames, but I personally feel like the 5 to the 15-minute, this works best. If you're framing your zones on the 1 hour to 4 hour, you can find these trades all the time on the 5 to 15-minute. You don't need to go lower than that. And I think if you go lower than that, you end up losing more than you win anyway. These setups, you're not going to find them every single day. They're not going to be on every single pair. They're not going to be there all the time. But when you get them, they are absolute gold. You can get a nice tight entry. A lot of the time you'll have entries like this, which will be on just this last candle up. To be fair, you could have caught that. Look, you could have caught that last candle up on the 15-minute. You can play around with this if you want. That would have given you a 10-hour trade from 6th of June, 10 o'clock to 3 in the morning, 7th of June. So this was in 4 hours. You got a 10-hour trade. It's 10% on your account in 4 hours. So these trades are really high quality. This is what you want to be looking for when you're taking trades. You want to be looking for high quality trades that continually play out in your favor. High quality, high probability, and high potential. Okay. We've spoken about high potential quite a few times. What do I mean by high potential? Well, a high potential trade is a trade that isn't just a corrective move from, here up to here, which only has the potential of 1 or 2R. Okay, high potential move is a move that has the potential to go a long way. So the likely outcome here is that this is going to continue to take out liquidity to the low. Let's just speed this up a bit. Let's turn it up. Let's speed this up. Let's pop it proper high. Let's speed this right up. Okay, well, look, we got taken out for break even there, but you get what I'm saying, okay? The minimum potential for this trade, I would have set my first one at that kind of weak demand, okay? Why is that a weak demand? Well, that's a weak demand because this move up hasn't broken any structural highs. That is a demand zone, but it's pushed up. It's not broken this high here. So that's now a weak zone. We mark that up as a weak zone. Really simple, weak. And there we go. We expect that to be blown, which it was. So that'd be my first target there. Okay, I would have taken my 2R out. I'd have taken my 4R out. And then my final target would have been there. I'd have been out the trade at a 7R, and I'd be really, really happy with that. If you could get yourself a 7R trade once a week, trading at 1%, you're doing 7% a week. That's more than a lot of traders do in a month. And I guarantee you that's more than you're writing at the moment on average. So be more selective with your trades. Take trades that make a lot more sense and play out over and over again in your favor. I've tried and tested this setup and it works over and over again. Like I said, you're not going to find this every single time, but start looking out for it in charts because you will find it all the time. I'm going to cut this video here, guys. We're up to 15 minutes. As you can hear, I'm struggling a bit with my voice. I'm going to record the next couple of parts for you with the next 2 setups tomorrow for you, so you have them. But this is my main reversal setup. So if you can start using this straight away, you're already onto a winner. Make some notes, write this out, start looking out for the marketplace. Send me some evidence as well. Find this in the marketplace, draw it out for me, and then send it across in the Discord. I really love to see how well you guys are doing and how you guys are picking this up. And if this is not part of your trading strategy at the moment, make it part of your trading strategy, because this, I'm telling you, is an absolute game changer.